Welcome to another episode of the Moving Market Podcast. I'm Jeffrey Dunyan, the host of the Moving Market Podcast, the Safe Option Strategies Daily Market Update. It is Tuesday, March the 5th, 2024. Markets took a tumble today. The NASDAQ, the Dow, the S&P, all down over 1%. And for a single day move, 1% is a big deal. We're going to talk a little bit about why that happened, what the likelihood is of it happening again in the near future, and what you can do to be better prepared for it if it does happen, or what you can do to take advantage if it doesn't happen again. We're going to go over all of that and talk about a few other items of interest. Take a minute before the podcast is over or at the end of the podcast and check us out on sostrades.com. We're off to a phenomenal start this year. Every trade we've sent to our members of our program has closed profitably so far this year. We're up over 30% now, and just absolutely kicking the tail end of what the market averages are doing, at least the index averages. So make sure you check us out, see if there's something at Safe Option Strategies that's a good fit for you. It's sostrades.com. Enjoy the presentation. Well, as you can see, it was not a spectacular day for the market, at least for the indexes. Dow Jones Industrial Average closed down 404 points, the S&P down 52, the NASDAQ down 267. From a percentage standpoint, the NASDAQ definitely took the biggest hit today. Both the Dow and the NASDAQ were largely pulled down by the likes of Apple. There was a report out overnight or this morning that Apple significantly underwhelmed with their sale of the new iPhones in China for the first six weeks of this calendar year. And that really sent Apple tumbling. Apple was down on the day almost 3% at the close. There were a couple of times today where they were down even deeper than that, but pretty close to a 3% sell-off on the day. And look, every now and then when there's an earnings report and a company really knocks it out of the park, they see a 10, 15, 20% move up on the day, or they really miss badly on an earnings report. They might be down 10, 15, 20%. Those kind of things happen. But on any given day, 3% is a big deal. You start imagining the number of trading days there are in the year and what 3% would mean if it happened over and over and over again. That's a big one-day move for any company, especially a company that's not involved in earnings report. A lot of people feel like Apple has gone from being a growth stock to more of a value stock. Apple is a great company. Apple is a company that, while some people may think of them as a one-trick pony, with the iPhone, the reality is Mac sales are still good, iPad sales are still good, Apple Watch sales are still good, and Apple continues to increase the percentage of their business that comes in from services, and that's good as well. I believe that Apple dumping their electric vehicle ambitions is going to allow them a lot of money and free up a lot of time and a lot of resources to go full steam ahead with artificial intelligence, which is what's taking companies like Microsoft, Amazon, NVIDIA, some of these other juggernaut companies in the right direction. And now, granted, Microsoft had a big sell-off today as well. A couple of other big tech companies had some sell-off today, but I think in those cases they will be somewhat short-lived. Apple may feel the pain for a little bit longer of not having gotten into this game a little bit faster and been aggressive in it a little bit faster, but they're going to be all right. I'm not worried about Apple in the long run. I'm currently not trading Apple in my portfolio, but I do a fair number of spread trades on Apple, and I will continue to do so. Apple pulling back was the biggest piece of news today, but there were other things that were going on today. There is concern and fear over the inflation numbers that came in a couple of weeks ago and the economic reports that are coming out this week, most notably the jobs picture, which will start tomorrow with ADP and JOLTS in the morning, the overall job situation that will be, we'll get numbers on that on Friday morning. And then Jerome Powell is set to testify and speak before Congress tomorrow starting at 8 a.m. my time, 10 o'clock Eastern. And as is usually the case, the Fed chair is going to be pressed. He's going to be pressed about some things that are going to be really stupid questions from really stupid people who were only smart enough to get elected into a public office and now spend all their time trying to appear smart even though they're not. And then he's going to get asked some questions that he probably shouldn't be asked about what he's going to do about certain things that are outside of his control. And then he's going to be asked the more meaningful questions about the likelihood of rate increases, rate decreases, how that's going to affect other parts of the economy. And those are the types of questions that are coming from the more intelligent people, in my opinion. So that's what we've got going. It is going to be a busy week moving forward. I did not expect today to be what it was. I think some of this is a little bit of a bubble burst, and it's not like a massive major thing. It's okay. Look at this trend. If you're watching the video of this instead of listening to just audio, I've got the SPX, the S&P 500 index on a stock chart on my screen, and you see this amazing run up it's had since the end of October until now, and I can count 1, 2, 3, 4, 5, 6, 7 times in the last in November, December, January, and February, where it's pulled back as much or more than what it did yesterday and today. And the trend just keeps on moving up in spite of those pullbacks. So I don't think it's anything to get overly excited about. Of course, the NASDAQ took the biggest hit today. Oftentimes, the NASDAQ has a tendency to move a little bit faster, a little bit farther than the other indexes, especially when there's things related to interest rates and rate hikes or rate cuts. But the overall picture is the same. You've had this amazing growth since the end of October, first part of November. You've had several times where the NASDAQ has stumbled, maybe even a little bit more than what the S&P or the Dow has, but that overall trend has remained very steady. And I see no reason to believe the NASDAQ is not going to continue up, at least for the near future. The biggest thing that could change that is if the jobs numbers tomorrow and Friday come in absolutely horrible as it relates to the Fed and the possibility of the Fed raising rates. Not cutting rates, but raising rates. I said that correctly. If the job numbers come in too hot, that signifies the possibility of more inflation, because you're going to have more dollars chasing fewer goods. That is the very definition of inflation. So if the job market comes in really hot, it's going to appear that the Fed is not doing an adequate enough job or a good enough job to suppress that job market in the way of taming inflation. It's too bad that bringing inflation down has to be at the expense of people having jobs and a robust job market. But that's honestly what the Fed wants to see to bring inflation really into check. If you couple those reports with Jerome Powell making some comments about maybe no rate cuts this year, or there's nothing definitive about rate cuts this year, if he said anything to that effect, you're going to see this market continue to sell off. And I think you will see that 10% or more correction that I've been kind of looking for since this rally really started back at the first part of November. So watch carefully what happens tomorrow and how the market reacts to it on the jobs numbers, but more importantly, the testimony of Jerome Powell and what he says. That will be news throughout the day. A little bit of politics going on is that it is Super Tuesday. There's, for all intents and purposes, even though I believe it's already over, today will, I believe, finally seal the deal for Nikki Haley, as well as the couple of people that believe they're challenging Joe Biden. I think after tonight, it will be definitive that Trump is going to face Biden in the election in November. And that is assuming that Joe Biden makes it to the finish line. I personally do not believe he will. He might make it to the convention. I believe he'll get replaced at the convention if he makes it that far. And I don't know that I would, if I was a betting man, I would put money on him making it that far. But Trump's going to be the Republican nominee, and it's going to be a knockdown, drag out, ugly affair. When it has implications directly to the market, we will make sure we talk about it. I don't believe the results of Super Tuesday are going, because we all know what the results are going to be. I don't believe they're going to have any effect on what the markets do over the next couple of days. I think it's going to be those jobs numbers and Powell's testimony tomorrow that are going to be the big impactful pieces. So we'll watch for that. No trade adjustments for tonight, either on collar trades or spread trades. And we'll wrap up right there and see you back here tomorrow. Thanks, everyone. Bye-bye.